Good afternoon, everybody. Happy Monday, holiday week of trading, and we got markets picking up where we've been most of the year. Green territory in equities and in metals. And you're talking about near records on the indices, but gold record prices, silver as well, platinum making a run for those records all the way back from the early 2000s. We kick it off with the S&Ps. We're up by 43 points right now, up by 0.6%, just off the highs made earlier today. We're trading at 69.30. Now, for some context on the S&Ps, you're only 23 points away from all-time highs on the futures made October 30th. And yeah, we got quite a run going on right now in these equities, led by the Russell, as we'll get to. Russell's up 31 points. NASDAQ 100, we're up by 0.5%, 25,688 right now, up 114 points. The Dow up by 0.5% as well, 245 points in the green, 48,710. And the Russell up by 1.2% at 2576. Bitcoin, some selling throughout the day. We just hit 88,000. We're trading at 88,180, flat on the session from Friday, but we got selling today. We came into this in positive territory for Bitcoin. Crude, we get some higher prices. We're finding a bid in crude. Crude right now up $1.52, up 2.7%, 58.04. We were just trading a 54 handle last week. Crude 58.04. We jumped to yields with the 10-year, a little bit of lower price, higher yield. 10-year 4.16%. The dollar gives back some of those gains from last week. We're pushing 98.31 right now. There's your short-term time frame on the dollar. We trade lower from the overnight session. Got a little dollar weakness off about 29 pennies. And dollar weakness helping the gold market. You come into the opening bell at about 44.60, right? So not, most of this was overnight. You had the dollar weaken and you had gold accelerate higher. But as I said this morning, so check it out. You go over to the dollar. Okay, and here's the week of the dollar last week. As in the dollar weakened overnight, but all we are is back to where we were Thursday, Wednesday, and the end of the day, Tuesday. Okay? Thursday, gold only spiked to as high as 44.50. Wednesday, we were at 43.80. And Tuesday, the spike was 43.60. So right now, you got gold trading more than $100 higher at the same time that your dollar index was actually weaker on Tuesday. And what is that pointing to? That's pointing to strong metals, okay? When you get the dollar strengthen, you're not pulling back in gold as much as when the dollar weakens, gold is going up. Now, even more exacerbated with silver. Silver's up $1.25. That's an all-time high of 69.52 this morning. Now, check out the volume on silver. Watch this. Now, we had massive volume on October 13th, okay? We haven't broken that on a weekly with volume, but check out the last 3 weeks in silver. 547, 613, and 556. Three of the strongest weeks out there on the chart. Okay, you compare that to gold. Check out those last 3 weeks. Not exactly the same strength. They're talking about it in the den. They're talking about it everywhere, right? The run silver's having now. Check out platinum. How's that for some buying last week? Right? So the leader's platinum right now, second in the running silver. Gold is still strong, okay? We're not selling our equities right now, but as I keep saying, I'm going to tighten those stops, all right? Because we are going to get some volatility in these metals. We're going to get a new Fed chair coming down the line, probably in the next couple weeks, realistically, within the first couple weeks of January, from what the president says, the speculation. Pressure is going to be on rates to be lower. That's going to keep pressure on a weak dollar. And that should be a wind at the back of gold, silver, and metals. But guess what? Nobody quite knows what that rate path is going to look like. Chairman Powell has 3 meetings left, and then the new chair will get 5 meetings throughout next year. But as we've seen over the past 1, 2, 3, 4 years into COVID, very difficult for this market as we swing violently, even on the 10-year, to figure out where rates are going. We've been violently wrong on many occasions. Okay, you go back to September of last year. First market saying, oh, the Fed's going to dramatically cut, right? Higher price, lower yield. I think we hit 3.6 or 3.7. And then we got it massively wrong the other way. We got lower price, higher yield, right? Inflation, no, that didn't happen either. Then we were back and forth. So we're going to get some of that volatility. So it's been a heck of a run. Okay, I was talking to a friend today, and we were just talking about, man, you pull up the GLD. Folks, GLD just traded from $180 to $408 in 2 years. And where was your max pain? You had a little bit of a pullback on the tariffs. Didn't seem like much compared to what was going on with the equities back then, though. So really, that didn't seem like much, right? If you were in gold or the GLD, it felt like a safety play because you were actually going up when the whole rest of the market was going down, right? And then you got this pullback here. That's it for 2 straight years. So I imagine that we're going to get a pullback at some point. We'll see if it happens. But there's no shame in picking a stop. I'm not selling, but I have stops in the sand. And, pick a stop, write it down, do whatever you got to do so that if the market hits it, you get out. Because another way to look at that is that we're going to get pullbacks. And if you put a stop in place, you're going to have more equity and more cash, liquidity to get back in on the next trade. We're going to have trading opportunities in this market. And I think it's going to be a great market. But I think we'll have a little bit more chop next year than we had this year. The only thing we had this year was a consolidation and a 2-week pullback. That's it. I mean, folks, it's the end of the year. Outside of this consolidation you had, which realistically is not that big of a consolidation when it's only a $250 consolidation on gold, and meanwhile you just traded from $2,600 to $4,400 this year. Outside of that, what do we got? 1 red week, 2 red weeks, 3, 4. Those are red, but they don't count practically because you almost went up. Right? So 3 or 4 weeks, maybe 5 or 6 weeks of negative. Folks, it's the end of the year. All we had was a consolidation. So I'm looking forward to a little bit more volatility next year. That's going to provide some opportunity. But the other side of that is, just like gold is getting stronger than the dollar right now, as in, gold's at 44.73 right now, as I just mentioned, well above where it was last week. Meanwhile, the dollar was actually last Tuesday was trading at 97 handle. I think gold's just leading some of the dollar weakness that we may get. But guess what? You're going to know real quick whether you're right or wrong because you are right at that channel line, man. And you're hugging 100. You start breaking away from there. 90 is the next area, but this is your critical point as you're bumping up against that consolidation. But boy, metals. But not getting out yet. Not getting out yet, that's for sure. There's nothing to say that this rally is not plowing on. Gold, volume getting a little weak, but guess what? It's holiday trading, folks. It's going to be a very light volume week. This week, same deal next week. We got New Year's Eve, and then New Year's on a Thursday. This week, we got a half day on Wednesday, closed for Thursday, okay? But Friday, that's going to be one of the lightest volume days of the year. All right, folks, we're coming right back with our man Steve Rhodes. Talk some markets. Don't go away.